All right, all right. Okay, looks like we're live, everybody. It's Sunday, 11:30 a.m. Faisal and I were a little late on today's analysis, but July 19th, we're going to discuss the U.S. stock market, what's happening with the Fed, what our insight is for the week ahead, how we're going to be positioned in the market, and yeah, just lots of things to discuss. So welcome, Faisal.
What's up, man? How are you doing?
Doing fantastic. So Friday we had a discussion about, we were shorting tech and casinos,
Yes.
and I think Friday you were a little bit concerned about tech, but still not completely under pressure. And I think we also spoke about industrials still doing well. So how is if at all your um, research changed going into the week ahead?
Yeah. So I do think tech is really under pressure. And I think they should see more selling. I think probably early this week we'll get some good signs. If Microsoft, I think Microsoft was the first big tech leader that was starting to show me multiple signs of deterioration and then continued to show even more weakness closing into Friday. Um, Yeah, tech is not a place that I want to be in right now. I think just as you said, industrials, healthcare. I mean, healthcare damn is really looking like it's starting to churn. And I mentioned a lot of the medical device companies like Abbott, Edward Life Sciences, and Boston Scientific Friday. But I was taking a look over the entire healthcare sector this weekend. You have companies in a broad variety of industries that are doing fairly well and actually breaking out in some cases. Like we're in a stock called AbbVie. It's a very big, major, big pharma company. Um, and it's a very good company. They made a really key acquisition buying Allergan, which has a lot of these Botox products and other cosmetic products in their line. And that seems to have changed the entire fabric of this company. And so AbbVie, I think, just broke out Friday. It's looking really good. And I think for the most part, healthcare is probably the safest place I would want to be to make a medium to long term investment at this time. But industrials are still good. Housing is still looking good. Utilities,
What
surprisingly.
are some tickers on housing that people could look at?
So my favorite, I think, Dr. Horton DHI is probably my top one, and then Lennar LEN and Pulte PHM are probably my two and three. But for the majority of the segment, housing itself, like it's pretty hard to find a loser in housing. I just think that those ones are probably going to do a little bit better than the rest and have a higher floor than some names, maybe like Beezer Homes or Hovnanian or something like that. Um, so yeah, I think those three are if you're trying to invest in the housing sector, I would definitely pay close attention to those. And if you're also trying to get a technical picture on how housing stocks are doing, you need to look at the ETF ITB. That
Home
is pretty much,
construction.
yeah, home construction, and that's pretty much my main barometer as to when I figure out when to get into these stocks. Because once ITB starts to bottom out, like I said, most of these stocks in the industry move together in the same way. Usually, when one has an update, all of them have an update. It's really hard to find mixed days within this industry. So it's really important to watch ITB. When ITB starts to break out or bottom out, that's usually a really good signal to get into definitely one of the first three names that I mentioned.
Okay, got it. I want to go back to AbbVie because this looks like a fantastic breakout trade. And I think a couple of weeks ago when we talked about this, one of the markers that I was looking at was right near the previous highs that AbbVie put in around February 2018. So I would probably say for our viewers, again, not financial advice, but if you are looking into AbbVie, the fact that it has broken out and it looks like it's staying above its key level of 97.86, it has a potential to rise from here all the way to that 121, 170, or 121, 122 marker. So definitely pay attention to that.
Yeah. I have a gap. I have my target at 106. That's where kind of like the top end. Yeah. the top end of the gap, right there. Yeah, I have 106 as my target. I think we got in at around 96, and so with healthcare itself being probably the strongest sector right now, you would expect leaders like this that have already broken out above. I mean, that's a pretty major resistance level to continue their grind upside. I will say though, it's really important to watch Johnson and Johnson this week because they reported a pretty good quarter, but the momentum wasn't there in my opinion, and I really expected the stock to do a little bit better after reporting. And this is, I think, the biggest big pharma healthcare leader. So I would definitely pay attention to Johnson Johnson. Hopefully, it can make a higher high than last week. But if it starts to teeter off a little bit, I'm going to get a little bit nervous about my AbbVie position. Because once again, this company has been one of the few to already report earnings. So that angst is out. Now you want to see the momentum start to accelerate once the fear has been drawn out. So if healthcare continues to see momentum as a sector, you'll definitely see Johnson Johnson rise. If not, if it's kind of like a fake breakout move, I think you'll see Johnson Johnson move down before any other stock.
Yeah, I was gonna say if you look at this 150, 148 level, I mean, J&J has tried to break out from this level since January 2018. Tried once right there, failed. Second time failed. Fake out right there in February. Then we had the coronavirus spillover, failed. And now it looks like it's finally gearing up to push higher because it broke out of this descending trend line. So if it could stay above like 149, 150, right? I mean, chances are, it has potential going for it, like momentum, behind it.
Yeah, I'm just very surprised that it hasn't broken out in a large way itself because not only is it a great company, I think in terms of its product line, not morally. Okay, I'm not a fan of them morally, but um, they're also in a part of the vaccine. So you would expect the stock to have a significant floor, considering that these biotech stocks and these vaccine related stocks have done enormously well. I mean, you look at AstraZeneca, AZN, that just broke out significantly off of vaccine news. So Johnson
Yeah.
and Johnson has that floor, but for some reason, it's not seeing the momentum that I would expect, considering it has good earnings, good fundamentals. Um, the dollar is lower, and I know they really benefit from that. And also they're part of the vaccine cultivation. So I'm just really confused. Like you said, it's tried to break out multiple times and kind of come back down, and maybe it's just making a cup and handle type of deal. But personally, I thought I would see way more momentum from this stock.
The one thing that really puzzles me is how frequently we've seen the news cycles come about vaccine news. Bring like that the whole idea of hey, here's a development on the vaccine trial or this or that. Right around the time the market is like pulling back. Um, do you think in some ways, just if we put our tinfoil hats on, like I think scientifically, the one thing that I've heard from numerous doctors, scientists, they don't think that a vaccine is possible at least for several more quarters, like probably end of 2021. Let's just say we have a rapid pace of potential development of vaccine trials, that the vaccine itself is safe to use. Do you think that all these companies are trying to chase, or rather, the companies are getting, this whole vaccine surge priced in, but there can only be one winner? Like, do you think that this whole thing seems like a charade of like every time there's even the slightest bit of vaccine news, the stock pumps, but in reality, nothing has really changed, right? It's not like we're any that much closer to a vaccine.
Yeah. No, I totally agree on the fact that I think I don't know who's doing it, but the market's definitely going up too much on just one company putting out good news or something like that when there are a majority of companies that are probably doing great things, and the market already knows that. But for it to take up 500, 600, 700 points off that news is pretty. I think it's pretty shocking. But
Yeah.
like you said, I don't know exactly how long it's going to take to get a proper vaccine, but at this point, like I said, I'm probably not going to take the fast produced vaccine, nor do I think I may like need to take. I don't know. Like I think the primary the primary audience for the vaccine is going to be old people. Like I think once the first fast track vaccine comes out, young people are not going to take it. I don't think there's going to be a rush to take it at all, but you're going to see
Yeah.
a rush of old people to take it. And I think that this poses a question. Once a lot of our elderly and at-risk populations start to take the vaccine, um, do we then start to eliminate fears of going out and everything like that? Because I don't think it's really contingent on every single person in America taking that vaccine. It's pretty much shown that it's not as deadly to people who don't have pre-existing conditions or anything like that.
Yeah.
So, that's something to pay attention to. That even though the headlines may say when the first track vaccine comes out that maybe like 5% of the population has gotten it, it's really important. And I think it'll be key to understand how much the participation is among the elderly and at risk. Because, like I said, if they start taking it, and I know that my grandpa or my dad or anyone is safe from getting it. I don't know how well the vaccine is going to work, but in my mind, at least we have some defense. I think I'll be more inclined to go out and not be afraid to maybe catch something, knowing that my loved ones will be protected.
Yeah, that's a fair point. I just found, this whole thing that's going on in the market, how the market has been violently reacting to any bit of positive news. It's been an interesting, cycle in terms of stocks, because all you need is, like, even the slightest positive news about vaccine trials or something happening positively towards vaccines being developed. And not only do you see that stock shoot up for that company specifically that's developing this vaccine, but the overall market seems to kind of like take it in stride too. It says, okay, you know what, we'll go with this. You know?
Yeah. No, I mean, there's a lot of beaten down stocks. Like, I was in the casinos before the vaccine news happened. I was shorting them, and I was making really good money and win. And then all of a sudden, the vaccine news came out, and it was up 8% in a day, and I lost some profit and more.
Yeah.
So there's a lot of these stocks that have been held down because of the vaccine, which is right. I mean, casino traffic has come back. What is it? 40% from its lows, or 30%. It's one of the lowest segments to actually come back during this recovery. It's really underperforming even restaurants, dine-in restaurants actually. So
Yeah.
that there are a lot of these stocks that just feel contingent on the vaccine coming out. And so I get that those underappreciated stocks, airlines, they make up a lot of the Dow and the movement in the market. If you see those stock groups, they're not just going up 1, 2, 3%, they're going up 8 to 10% in a day. That really elevates the market and makes it feel like everything is going up like crazy. But in reality, it's kind of mostly these stocks that are pushing that weight. And that's primarily because so many people are short them, and so news like this really seems to scare shorts out of the stock.
Yeah. Fair point. I want to talk about, the conversation we were having before. I had pulled up this chart. You know, it seems like that our discussions have kind of, at least for the last several days, several weeks, we've gone to the point where a lot of us accept that, okay, yes, we agree that tech stocks are probably going to come out of this strong. Maybe companies like Uber might do well, Microsoft, Apple, Facebook, Amazon, Google, et cetera, et cetera. The concern is not that, okay, yes, down the line, these stocks will do all right. They'll do just fine. I mean, Apple has a 178, $180 billion war chest uh, of cash. We're not concerned about Apple, right? But
Yeah.
the stock price right now for a majority of tech, for me, it seems significantly overvalued, and it seems like the overall market is clearly ignoring signs of, the underlying bleakness of what's happening on Main Street. And not only that, the market continuously goes up, especially, in these tech stocks. So first of all, my question to you is, which we've discussed many times, is do you think that the market itself is in a large asset bubble, specifically tech? Um, and do you think that, the Fed is responsible for it?
The Fed is not directly responsible, but they're responsible for giving this type of all clear, everything is safe no matter what. We will even prop up the companies that were going to be dead. We are going to give them some type of funding or some type of alleviation, and that natural business cycle of good business staying and bad businesses going kind of is pushed to a halt. And in in this case, rightfully so, you don't want to see people lose their jobs during a pandemic.
Yeah.
But it does stop uh, that type of fear and just the overall market cycle in general, that there will be winners and losers. Right now, it's just like everything is a winner, except for the really, really bailed out stocks. And even those stocks are up from their lows. It's not like even though things haven't gotten much better, they're not trading at the lows that they were trading in mid-March. So, I would say to that in terms of a bubble forming in tech, the bubble was primarily driven, and I don't even know if we're in a bubble, but I'm just going to call it a bubble. This type of inflation was primarily driven by a really good reason, which is safety. People flooded these stocks because there was a lot of safety in tech earnings. Those were probably the biggest earnings. You had the software integration theme that companies that were expecting to integrate whether it was payroll software, analytics, AI software, cybersecurity, whatever they were planning to spend it over 5 years. They ended up doing all these initiations in like 5 months. So you had this massive influx of capex spend in the software sector that just jumped up these stocks like crazy. Whether or not that rate continues is another question. But safety is the main driver of this bubble, and so it's not like it's not a bad reason, especially when there's still so much uncertainty. So that's why I'm a little bit hesitant on saying that this is the absolute top of tech. I think tech will pull back from here. That's why I'm short, but I don't know if I'm even medium term bearish. I think tech could even make even higher highs than it did this year because, like I said, safety is the primary driver of this quote bubble. The question remains, though, that I really struggle with as a medium term bull is if I'm starting to see the rest of these sectors recover, whether it's industrials, healthcare, everything besides tech, excluding the bailout stocks recover, then why am I paying such a high premium for safety? If the V-shaped recovery argument is actually true, why are these stocks not being bought? Why is tech still trading at such a super high valuation? Because it's safe. Because there's
Yeah.
no reason to even buy a safe asset if things are in a V-shaped recovery, which is kind of what you hear a lot of the bulls say, and the data, like a lot of the data that I look at, kind of suggests that we're kind of teetering off a little bit, slowing down, but nonetheless, it's still a V-shaped recovery from the low at this point. So that's the only question that I have is why is the safety premium still on tech if we are kind of getting towards this notion that everything will be fine, everything is going along just fine in terms of the V-shaped recovery.
That's actually a great point that you bring up. Why, first of all, exactly. Why is it that tech stocks are the only ones that are taking off? And if this is supposed to be a V-shaped recovery, if the market is kind of thinking that, okay, yes, we believe we can call 2020, a wash, should they start pricing in things like utilities or energy or financials? Why are those stocks still significantly beaten down? Why is it that banks themselves are still struggling? Because in '08 and '09, banks actually started recovering along with the rest of the market. You're not seeing the same thing right now. You're definitely not seeing it with energy. Industrials just started picking up. So that rotation of high growth to value, that's still largely disconnected, right? It doesn't
Yeah.
seem like investors are flocking to the whole breadth of the market narrative where everything seems like it's starting to pick back up. It's rather that these small segmented areas of the market that are quote unquote bubble like, they're in bubble like conditions, like tech, like electric vehicles. And we had a little bit of rush in bailout stocks, but that kind of faded away. But tech and electric vehicles, like, why the hell do I have to pay such a high premium to be in these stocks? That's the real question.
Yeah, and especially like considering you're seeing, like you said, utilities should be a very key player because they have significantly high yields, and with interest rates so low, you usually see utilities really outperform when yields start to come down. So like there are all these normal market cycles that are supposed to happen based on some of the factors, the economic factors that we have right now. And you're just not seeing that. You're still seeing people pay for safety. And it's like, okay, why are you paying so high for safety if everything is supposedly going to be okay in the next year? Like, I still just don't understand that.
Yeah. So Faisal, let's again, go back into the topic of the Fed, right? The elephant in the room. Um, there's this chart that Sven Heinrich, he put up this chart about how the Fed has effectively led this market into its mania bubble phase. And I know you don't quite agree that the overall market may not be in a bubble, but I think what's abundantly clear is that since the Fed has stated that they are going to put a backstop on the market, especially junk bonds, especially investment grade bonds, LQD. And even now, on Friday, we discussed, why did the Fed go out and buy Amazon bonds and Apple bonds when the overall economy is still struggling? The average person is struggling, the small businesses are struggling. So, is there merit to this conversation that the Fed, first of all, is really propelling this quote unquote market bubble, and for the most part, the average person or smaller businesses are still struggling. So, if the 70% of U.S. GDP, I think, comes from these, or 70% of jobs comes from these small businesses, and they're the ones who are really struggling, how good is really the economy, and should the market just continuously go up even while us knowing that the real economy is struggling, in this stressed manner?
Yeah, and I think that's a great point, and I think that's why you're seeing such a split in sector unity. You talked about the banks falling and not participating, and that's I think it's directly reflective of the risks in the labor market. Even stocks like Visa, which I'm currently short in. Visa is a fantastic company and great company long term, but I think once again it's been bogged down and been one of the few companies that was fantastic before this correction to not make a new high along with tech, even though it's considered a fintech product. I think that's because of the fact that they are pricing in a really bad a labor crisis. But for the most part, this market will confuse people because it's primarily Apple continuously going up every day, except for last week, or Microsoft or whatever. The big companies that have said we can weather the storm, it seems like everyone's flooding to them, and they have already waited so much. I'm sorry, they're already weight so much in the S&P or the Dow or whatever. It creates this larger disconnect between the real economy and the stock market. So
Yeah.
it's like I like in terms of the effect of small businesses. Like there are a ton of small businesses that are closing in my area that will never come back, and those jobs will never come back. And it's just uncertain at this stage whether or not I've talked about the recovery being led in the industrial sector, the jobs being made up there. Definitely in the tech sector, there's some hiring and probably the healthcare sector too. But I I just don't think those jobs will be made up as fast as I guess the Bulls think, and at some point it will cause. Actually, I don't know if it's going to cause an overall pullback in sectors like tech because, like I said, it's depreciating um, things like banks and things like credit cards or something like that. So I don't know if that's how the market's going to work. It's just going to actively price in things that will make sense. But if you just look at the headline number, we've already said stocks like Apple, Amazon, Microsoft, they're going to be fine. And those
Yeah.
are the main ones that drive up this market 300, 400 points when they go up significantly. That they can push this market up in a hurry if they start going. So, maybe in the future, that's just how this market will work. You'll continue to see banks, things like energy, because people are not going to be going out as much, continue to slug and price in the risks. Whereas the companies that are doing fine, they'll continue to see some type of a safety trade.
Yeah. Yeah. Fair point. I heard this really interesting argument by someone on Twitter who has looked into the Japanese crisis, and he was kind of just spitballing here, but what he was effectively saying is the path that we're on right now with so much central bank Fed intervention, it is possible that the central banks might be the only banks that are the first lender. They're not the lender of last resort, but they're going to be the first lender. And
Mhm.
traditional banks over time might just disappear. I don't know. I mean,
Right.
just out of just spitballing, I was just like, it's possible, right? First of all, because what we've effectively seen from any of these large banks is they, in some way, require Fed intervention or central bank intervention because they themselves have just either crooked practices, they cannot handle the pressure of what's happening, in recessions or the economy. And they typically have to go back to the central banks or the Fed and have to ask for help, ask for bailouts. So why is it that these banks exist, right? Because if they're always reaching out, whenever they're in trouble to the central banks, well, it's possible that at some point the central banks maybe have an even higher authority on the overall banking and financial system. Anyway, I just thought that was a unique topic.
Yeah, I wish I could give you bigger insight, but I don't know. I gotta definitely think about that one. Um, I agree with you that it actually I don't know. No, I gotta think about this one. Now I'll come back to you on this.
Yeah, no problem. I think just for our viewers, make sure y'all go check it out. I think it's on my Twitter feed. I've retweeted it, so make sure you guys go check that out. Um, Let me see here. So one of the members watching, he asked about any thoughts on rotation to non-U.S. equities or even metals like
Ooh,
silver or copper. So I can answer that a little bit because Faisal and I discussed this privately. JP Morgan's one of their asset managers was talking about that they are moving a good chunk of money, or they've actually already allocated a good chunk of money into European equities. Okay. And if you look on the YouTube thumbnail that I have for today, going along with the question about metals, one of the most crowded trades right now is long US tech. But the second highest crowded trade below that is long gold. Okay. So gold, I think, as I stated before, is first of all a asset that does well in inflationary and deflationary environments. It is also seen as a hedge in recessionary environments. So it's very possible that I believe gold will do better throughout this next couple of quarters, next cycle. Because as I stated before, I don't see gold under $2,000 by the end of this year. Our community was talking about gold like way the heck back here around 1650 or so. And so far, we're doing a pretty darn good job. I've also spoken about GDX. Faisal has spoken about KL, which is the other ticker in the gold space. So GDX, I think I got into GDX like somewhere way the heck back here. Actually, no, it was I think down here, like 29 and a half, 30 or something. So GDX is doing pretty well. Faisal has spoken about KL, Kirkland Lake Gold. Um, and then beyond that, just to follow up with silver, I'm also in a silver trade, which I got into around 1705. Um, Again, all this stuff is time stamped in our community, so you can go check that out. So 1705 from here on up about a good 5.4%. Now, I don't know about copper because I don't trade copper, so you'll probably have to do research on that. But yeah, I'll let Faisal chime in. First of all, Faisal, the question was just to reiterate, any thoughts on rotation into non-U.S. equities, and then any thoughts on metals?
yeah, I think there's going to be a big shift into non-U.S. equities, but I don't know if it's going to be Europe. I've been hearing the Europe story, the value story in Europe for like 2 3 years, and it's never been panned out. So I'm a little bit hesitant to get into Europe, just personally. but I think China, they're probably going to be the only economy to grow this year. You have stocks like Alibaba that I think are still way too cheap, and they're also creating just massive inroads. Maybe as a result of this crisis, they've brought in a lot more um, audience from that, as people could not go out much and were turned to online shopping as a result to get their needs. Uh, Same thing with JD.com. And then there was another one, PDD or something like that. That's another online marketplace. EDU uh, is an online education service that's Chinese. There are a lot of these stocks that I think are going to be uh, massive outperformers, as just like you said, whether or not there's going to be a rotation into it, I totally think so. And it's going to come directly into these online players and these big tech companies that are in China. Um, but there's always risk in investing in Chinese companies, so I would say that. But I definitely think you're going to see Chinese equities uh, outperform a lot of sectors in the U.S. That's just my personal take. As far as gold and also copper directly correlates to Chinese growth. So if China's growing, you're probably going to see copper do well. So I guess you could say I'm a bull on that, but I have not personally checked out the chart in a bit, so I can't give you a good read. But gold, gold is a crowded trade, and I got out of my gold about a week ago, and then it started to pull back a little bit. But that's what's expected in these types of up cycles. I think gold will continue to go up, just as almost said, because it's an inflationary deflationary period. It's very volatile right now, um, and you're going to see a rush to that. But it is a very crowded trade. But I think you're going to have these volatile spike downs that could be tough to hold. But in the end, if you are a long-term believer, or at least a medium-term believer, I think you're going to see gold at a much higher level by the end of the year, maybe like 2,200 or something like that by the end of the year. So I'm consistently looking to get back into one of my gold miner stocks, like Kirkland Lake, Amo mentioned. That's probably my favorite one that I'm looking to get back into when I do like gold. So yeah, I don't know if we're done pulling back. We've pulled back a little bit, but it's a wait and see at this point. At this point, though, you kind of just have to focus on the technicals because the fundamentals really match up with the long-term momentum that we could see.
Yeah, that's a fair point. Um, Let me see here. Okay, so the one thing I do want to just finally talk about before we kind of wrap up this session is, um, what are you looking for the week ahead? What's on your mind? What's on your plate? In terms of trades that you're looking out for.
I think there are a bunch of tech earnings coming out this week. It's going to be a earnings week, probably the biggest one. And then I think next week is also very big too in tech. So I think hopefully I'll try and research all the companies that are reporting, but I believe Microsoft is the biggest one that's reporting this week. So I'll definitely be watching that and just primarily see the reactions. Like I said on Friday, the reaction to Netflix's earnings was very very positive. I was definitely expecting a lot more downside, but we'll wait and see just how it reacts on Monday. I don't think all is clear, even though it didn't meet my downside target initially. It didn't show enough momentum to the upside, of course, but uh, that'll be something else that I'm watching right on Monday is how Netflix reacts, and also Tesla. I want to start to see Tesla come down because that is really the most overcrowded trade right now among retailers, and I think it's just very overpriced. It's so overpriced that it's taken up every single other stock in its sector, regardless of earnings or real earnings progression. So Tesla is another one that I'm watching to see when it starts to pull back. I think that will be one of the first signs to that there's going to be a very high pullback in the high growth space. And once that happens, then we got to realize, okay, if we're going to have a pullback in the high growth and tech area, are the areas like industrials, healthcare, and housing, are they strong enough to hold up this market, or will we start to see deterioration in those stocks as well? Because they've gone up. I think housing stocks, DHI, which is my main housing leader, I think it's close to its all-time high. So these stocks are not at the same value that they were when we were talking about it, a month and a half ago.
Mhm.
So they're at resistance at this point. I really want to see if they can break above and start to show that they can be leaders in the market, even as tech takes a back seat. But yeah, this week will be a very pivotal week, in my opinion. And I think the reaction to earnings, especially a lot of the major earnings, should be really interesting, because I think you're going to see companies like Microsoft put out really good earnings, but are they good enough? Are they great enough to justify this type of valuation? And more importantly, what is the guidance like? If you've seen a lot of these businesses push all their CapEx money to integrate the software in this quarter, does that mean this growth is supposedly going to fall off in the next coming quarters because they've already done a lot of spending now on those certain projects? So that'll be another thing to see as far as um, the growth in one of the best sectors of the market, which is tech. And I think Microsoft will definitely give a lot of color on that.
Yeah, fair point. So for our viewers right now, make sure you guys pay attention to the earnings that are coming out. In the Advantage community, there's actually a Discord link right here, guys, right in the YouTube description. You can click on that. You can join our community. We have a ton of information that we have for our Advantage members, and also a lot of free videos that we do like this every single day. So if you do support our content, leave us a comment, leave us your thoughts on the market, and just hit the thumbs up, because it helps us, reach out to more people. Now, going back to the conversation about Tesla, I am completely in agreement with you. I think Tesla has just gone up so aggressively. I understand the argument about Tesla's not just a car company and this and that, but man, it has just gone parabolic, and the whole EV space has gone up with it, especially companies like Nikola and Workhorse and whatnot. So what I'm looking for the week ahead is, if I start seeing weakness in Tesla, I want to go aggressive on a short on Nikola, because Tesla can, possibly come down and teeter around maybe a range or something. But Nikola is one of those companies that I don't think people believe that Nikola is, valued at its current price without having built a single car. I don't even think they've actually, had real cars that are being utilized. So if that's the case, if we see the breakdown below this range right here, as we do right now, and if we can't climb back up above this area and hold, which is I think 53.5 or so, then I'd want to short it. And I want to take that short down towards this range low right here, around 40 and some change. And my stop would be right above this, 61 high. That is the trade that I will be willing to take if I start seeing a weakness on Tesla. Again, non-investment advice, do your own research, but to me, it just seems obvious that if Tesla is not going to hold up, I would say that these EV stocks like Nikola, like Workhorse, are probably going to see more damage. Let me see here if there's any other questions. Let's see. EMQQ. I don't know what that ticker is, actually. Exchange Traded Concepts Trust Emerging Markets. Oh, interesting. Cool. I never heard of this.
Yeah, I don't know if it has that much value. When I look at Chinese, well, I guess this is broad emerging market, but if you're looking for a good ETF to watch in regards to Chinese internet and stuff, I think KWEV is one, and I think ASHR is another. Yeah, this is definitely one that I watch, and I think ASHR is one, but I don't think that one is as much traded. Yeah, something like that. But yeah, KWEB is the one that I would definitely watch for the momentum that I was talking about in Chinese internet.
Got it. Fair point.
And then I think I'll get to my stock of the day unless you wanted to say something.
Yeah, I just wanted to talk about the Dixie and then treasuries real quick, and then we can just do the stock of the day. So I've talked about the dollar, how viewers can look at the dollar and try to figure out potential correlations into equities and bonds, right? So the simple correlation that I look out for is, number one, you could look at this from the FX standpoint of, if the dollar starts pumping up, I like to long the dollar against EM markets, EM currencies, like say the South African rand, okay? Or you can look at it with the Colombian peso. even the Mexican peso, MXN, or even, you could also look at it from the JPY right there, the Japanese yen. So simple technique is if the Dixie starts popping up, and this is key support right here, right around 96, 95 and some change. If we find support here and we see the dollar pushing up from here, the FX trades are dollar long against these EM markets. On the equity side, the correlation is a little bit different. The way I look at it is, okay, if the dollar starts pushing up and say the equity markets are already a bit overextended and they start selling off, well, the correlation is that, okay, it might mean that the equity markets are pulling back a little bit. People might be flowing more into the dollar, and thus the dollar will accelerate further. Now, bonds, somewhat similar. If we're looking at bonds, I think Austin had given us his insight that he wants to look at the bonds in a range. Okay, bonds are probably going to be in a range between the 0.60 basis points to the 100 basis points right there. So 60 to 100 area. That's his range that he was keeping an eye on. And so all I did was I put out a marker on the 0.592 support right here. If we start seeing bonds sell off, and I've stated this before, the way you want to look at bonds is it's basically the truth indicator to a market, the truth indicator to if the bonds are buying the fact that the equity markets are rallying. And so I've heard a lot of people in finance talk about, the bonds as they are right now. And it's that bonds are really not buying the equity markets. They're saying that, hey, yes, the markets are taking off and whatnot, but we ain't buying it. Okay. So what you want to pay attention to is if you start seeing a breakdown below this 0.60 or 60 basis point 10-year yield support, you might start seeing potential weakness in equity markets too. So that would be the first trigger that if these bonds, especially the 10-year T-note, starts breaking down, well, it might spell some trouble in the markets. Okay, so those are really the macro outlooks on how I view the dollar in relation to dollar EM trades, and then dollar correlations to the equity markets, and then the bond markets being potential leaders of how equity markets might follow. All right, I'll let Faisal go.
Okay, so actually, before I get to the stock of the day, there was something that I did want to talk about that was very interesting when I was doing my weekend research. So, one of the hottest sectors that seems to be doing better in the financial space, or sorry, the hottest industries, is actually the insurance space. And there's something very interesting going on that I had a thought about this weekend. Take a look at Progressive Insurance, PGR, or I think PGR, yeah.
This was just Ohio.
Yeah, that's it. Yeah, Progressive Insurance. They're the auto insurance company. Look at that company. That company just made an all-time high during this quarter, and I think it's one of the few insurance companies that has, but it may be indicative of a trend that is coinciding with the electric car vehicle trend. And it also could be because people are not driving out as much, and their payouts actually said that they did not, they collected a record amount. They didn't need to pay out for accidents as much during this quarter, which is why the stock just saw a huge bump up. But I wanted to just dig in a little deeper with when automated driving comes, what exactly does that mean for stocks like Progressive Insurance? And I think that we may be entering into a small golden age for these companies because with automated driving, I think accidents will come down a lot more. And once it becomes more standard, you may see accidents really come down to an insignificant amount, to the point where these insurance companies actually don't have to pay for a ton of accidents that happen because they're just not happening. And so what does that do to their profits? It just skyrockets them to the moon. And I think Progressive has probably been one of the best ones that I've noticed. I like Allstate too. I think ALL is a good value. That's not at an all-time high or even close to it. But I really wondered what exactly would happen, because at some point electric or automated driving will get to a point where I don't think we will need auto insurance. But how long are we from that point? And I think until we get to that point, these companies may end up being one of the most profitable companies in the new age when automated driving comes. And I think no one is really talking about it. Everyone's talking about AI going into all these other things, but the insurance companies I think are going to make boatloads of money as safety increases. I just wanted to get your thought on that, Amol.
Yeah, man. I actually heard a Real Vision segment, not pertaining to auto sector, but I think you bring up a fantastic point. We've spoken about um, the potential of autonomous cars. I mean, first of all, it's really not a question of if, it's when, right? And that time seems to be coming sooner and sooner, in my opinion.
Mm-hmm.
Tesla, I know, is already working on automated cars, autonomous cars rather. I know Uber actually is working with Tesla, I think in Dubai or somewhere in the Emirates, where they want to start working on driverless, destination or pickup to destination drop offs. And I know they've already started, doing like beta testing on that. So I think Uber is definitely going to benefit from this kind of surge. Tesla will probably obviously benefit from that. And then, like you said, when it comes to insurance companies, well, what does it mean for these insurance companies going forward? Well, I think, for the most part, I mean, they're not going to be making as much money. Although I do think that it's going to take a pretty long time before we can go full driverless, for a majority of the population, right?
Mm-hmm.
So I don't know if that whole idea of these insurance companies are going to be in trouble anytime soon. I mean, I'm sure at some point their market cap is going to get chipped away at. But I mean, as of right now, if we're talking about, first of all, electric vehicles with autonomous capability, I don't even think it's like a significant, it's an insignificant percentage at present moment. In the next decade, that might maybe come up to, what would you say, like 10%, maybe 15%,
Mm-hmm.
right?
Yeah.
So, but going along with your point, I actually wanted to talk about insurance companies specifically because if we actually, so let's take a look at this, right? So let's take a look at, Metlife and Global Life. And by the way, these are all healthcare insurance companies. Oops, GL, Globe Life. Let me see. What are some other ones? There's some like larger insurance companies because I saw this segment about how with this whole coronavirus thing that's happened, hospitals themselves are getting so much money, right? And so insurance companies, kind of like you said about auto companies, they're not having to pay out as much in terms of um, uh, what is that called? Not premiums. I forget the exact word for it. Effectively, they're not paying out as much money to their subscribers, right? So if that's the case, well, that means that they're effectively keeping more and more money on their books, and so that means that the average shareholders will probably see more returns for holding their stocks down the line. That is, and we don't really know when this whole coronavirus thing is going to fade away. So I was actually having a conversation with my dad, and he was saying, he spoke to his insurance agent, and what they're effectively saying is, there's a federal government assistance program that's going into these hospitals. And so the insurance companies in general, even if you are a COVID patient, right, they're not having to pay out as much of your medical bill, let's just say if you were in the hospital. So if that's the case, well, we already know that insurance companies are saving out on all their money. So I think it might be time that, okay, these insurance companies like MetLife, like Allstate, what was the other company that you mentioned?
Uh, Progressive insurance, but they're purely auto.
Okay, yeah. So some companies that kind of dabble on the line of auto or healthcare or just purely healthcare, they might actually start seeing a surge. You may think that this is like the complete opposite of what reality is, which is that more and more people are going to the hospitals, and you would figure that insurance companies might be a little bit more tighter. But this again goes back to the whole idea of the Fed comes in and it's the big daddy of them all. It is saving everyone. It is basically the sugar daddy of every corporation, every zombified company out there. So yeah, I do think that's possible that insurance companies might see, a good pop.
Yeah. No, it was definitely something that was interesting because Progressive is a company that is actually set to decline earnings by double digits this year and next year. That's what the estimates are telling me. And you have a stock move like this. I just thought it may be indicative of what's going on in the future, as far as accidents not happening as much and just safety and driving and overall, just coming to an all-time high. But at some point, I think people will not want to pay for insurance or won't want to pay for insurance because we will all be fully automated and there's no point in paying for that. Maybe actually, maybe we will, but it'll be a much lower rate. But I
Mhm.
think, just as you said, we're a long way from that fully integrated automated driving space. So this is definitely a sector that I'm watching as far as, are they about to enter into a golden age of profitability? And I think so far, just based on what I saw from Progressive, they may be entering into that now. And I think it may be started with COVID because people are not going out as much or driving as much. And so their
Yeah.
net premiums that they got, which were at record levels, probably were indicative of that fact.
Yeah, fair point. You know what else I was just thinking about as we were having this whole discussion of insurance companies is it is possible that autonomous cars, companies like Tesla, develop their own form of inbuilt insurance. I don't think the whole idea of insurance completely disappears. It's rather that there's always going to be some form of insurance embedded into any, consumerism, if you think about it, right? Everyone, you have insurance for the worst case scenarios. Like if you buy an Apple laptop, you buy Apple Healthcare, whatever it's called, right? Apple Care,
Mhm.
right? Um, so I don't think that insurance in general will completely disappear. It's maybe that some of that market share may come back into quote unquote the whole Tesla insurance if they have any.
Yeah,
And
I actually think
then
that could happen. Yeah, that's not a bad idea.
and then what you've effectively done is this is where the whole idea of Tesla being, bigger than a car company, I totally agree with that argument. I think there are many things that we have not considered of how Tesla can suck in market cap and market share from all these different segments that we have not even thought about, right? Like
Yeah.
the whole insurance example that we just had. But I'll leave it at that. I will let our viewers give us their thoughts on autonomous cars, stocks they're looking at. If you guys think, what Faisal and I said about insurance companies, what your thoughts are on that. So leave us a comment. Come join our Discord group. The link is right below in the YouTube description. But until then, Faisal, I guess we'll see each other later this week. Yeah?
Yeah, man. Sounds good. Hope you have a good
All
one.
right. You too. All right, everyone. Y'all take care. Have a good rest of your Sunday. Cheers.
Peace.